Good morning, everyone. Today we're going to discuss gold's event horizons and their approach. And we're also going to discuss Costco, an update on Costco's venture into the physical precious metals markets. Let's start with the markets. The dollar is down 6.5. 10-year yields are 403.30. S&P 500 is 57.20, up 18 handles. The VIX is 21.98, down 67 basis points. Gold is 26.49, up 6 and change. We'll come to that in a minute. Silver is 31.38, down 29 off its lows. Copper is 443, down almost 10 cents. That's 2%. Gold silver is higher. WTI is 76.02, down almost $2, near its lows of the evening. Natural gas is 259, up 4 cents. Bitcoin is 62,500, up 340, down from yesterday though. Ethereum is 24.35, up 13. Platinum, palladium are down 10 and down 350-ish. So that's palladium at 10.15 and platinum at 9.72. Grains are down. Soybean is down 16, corn is down 3, and wheat is down 2, 1028, 414, and 600 respectively. Okay, just popping the chart up there for a second. That's the 10-year yield. Take a look at the markets there. There was news last night, significant news, market-moving news, but not necessarily for United States equities. China reopened after holiday, and their stimulus, which made the market rally significantly. Let's pull that up for you, give you an idea of what we're dealing with here, what we are dealing with. For all intents and purposes, we'll put the daily up for you. That's the daily Hang Seng Index. That's basically a good representation of China's stock markets. You could see that the market has had a significant rally in anticipation of and the implementation of the stimulus that was promised. However, yesterday, or the day that the market came back from holiday, today for them, things kind of fell out of bed. So you can say it's given back a third to a half of what it's already of what it gained. These are the markets saying, for whatever reason, we don't believe, we have our doubts, and we'd like to see you do something more about that. The 10-year yield on their bond, which would be an indicator of their markets, ignore the red line for now. If the 10-year yield goes up, that's a sign that there is a lack of confidence in their stimulus. Now, I'm not saying that it's warranted. I'm just saying that it exists. And that lack of confidence should be met with another bazooka shot, so to speak. I'm not sure what it'll be, but there's going to come a point where it won't be enough, and they'll have to do a lot more. Moving to today's topics. Gold's event horizon. Quickly, front page, Hartnett's history of oil and gold during wartime. This is about an hour long, but there's the last 20 minutes of it go into detail about how the markets are priced and how prices are managed during wartime with a focus on gold and oil. Costco's gold rush, we're going to go through that now. Well, presently, not at the moment. All right. Gold's event horizons. There are 2 event horizons coming. This morning, I was looking for a word that was a synonym for inflection point. It seems to be an event, a word that's beaten to death. And the other words were too dramatic. But event horizon came up there when I typed in physics or something. You know, I wanted to get something that was a little bit less salesman-y. Anyway, event horizon. Event horizon is a theoretical boundary around a black hole beyond which no light or other radiation can escape, a point of no return. That's interesting because for most Americans, the presidential election is a black hole for their investment decisions now. And as such, no light or balanced ideas can get into them or even escape from them. So they are hyper-focused on the center, the black hole of November 5th. And they don't know what's coming out on the other side, and they're positioning themselves for that. This is evidenced in observable market behavior, such as the increased purchases of gold bars from Costco. We'll get to that in a minute. And the newfound love the press now has with gold and headlines, even if only to get advertising clicks. Now, this is an hourly chart of gold going back over each yellow line there is 9 a.m. 9 a.m. is marked, and that's so basically it's 1, 2, 3, 4, 5, 6, 7 yellow lines representing 7 9 a.m. moments. In each of the lines that are yellow, so the ones for almost all of them to the right, all of them to the right, starting with, let's say the 5 on the right, all right, the 5 on the right, the last 5 days, the gold market at 9 a.m. has gone up. From 9 to 10, it has gone up on October 1st, on October 2nd, on October 3rd, on October 4th, Monday, October 7th, and now Tuesday. It would seem to be it's on its way to going up again. Now, why is that? That's because Americans are buying this now. That's because order flow is coming into firms in anticipation or fear of the election or inflation or other potential risks, geopolitical and otherwise. And they're saying, I want to own some gold. And this is on the back of reports like the one we showed you a little less than 2 weeks ago from Goldman Sachs, the mystery buyer. This is a good thing in the big picture. In the short term, it's not necessarily a good thing. Let me explain why. We come back to the event horizon concept again. Excuse me. These people are hyper focused on the election. Okay. And as such, they're not really thinking about the consequences if they're wrong. And so after the election, on the other side of the black hole, they could be puking. They could be selling it $100 lower. They could be causing it to go $100 lower. I'm just saying to keep your head and don't be one of them during this time frame. All right, continuing with what I wrote there. Expect more of this leading up to the election and possibly much more of it afterwards if things do not go smoothly. Remember, the other side of the black hole doesn't have to be $100 lower. It could easily be $600 higher. Right? It just could. I'm just not betting on that. I'm not betting on the election to get us $600 higher. I'm betting on the rest of the year and next year to get us $2,000 higher. All right. The event isn't where I'm placing my bets. All right. But this is the black hole we will enter, and you do not know what will be on the other side. God, Event Horizon is such a good explanation. Fortunately, this is where we have an advantage over the Costco dads. Fortunately, October 22nd is a trial run for those who follow BRICS activities. It's kind of a black hole leading up to the black hole. Expect, this is what we believe now, at least what I believe anyway. We, the royal we, expect some significant announcement focused not just on gold, but on oil this year for purposes of liberating the free market price of both. Consider that consider that moment, your peak over the horizon as to what's coming down the road on the other side of the black hole, beyond the black hole, beyond the other side of the black hole is a market that's going to be freed up by market forces going forward, knock on wood. Anyway, regardless of the black hole, regardless of the presidential black hole, what comes out of the BRICS is more important. It's not to say something significant has to come out of it at that moment. Months later, you'll find out more about what they have to do and what they're going to do. But I believe that the run-up in oil is in part because of something coming down the pipe with the BRICS. I believe we might see a more material link between gold and oil as we approach the BRICS event. Yes, oil's up because of geopolitical risk. Yes, oil's up because there are too many shorts, but oil's probably also up because there's something cooking. I think something might be cooking. I'm not sure. I will look into it more. All right, moving on. Anyway, the event horizon for the Costco dad should not be your event horizon. Your event horizon is October 22nd, and you don't care about the presidential election as far as your gold and silver positioning is. Okay. Costco's gold rush, a new wave of bullion buyers. Bloomberg wrote an article, and so we wrote an article. And it's amazing. Well, I'll tell you why it's amazing as I go through it. All right. This is our article. Right. This is a Swiss ounce of gold. Costco has, I'm reading from our own article. Costco has managed to create a unique intersection between convenience shopping and gold investment. Despite gold hitting record highs this year, demand for bullion at the warehouse retailer remains strong. Shoppers flock to Costco for competitive pricing on gold bars and coins, making the precious metal more accessible to the average consumer. This surge in interest is driven by the growing appeal of gold as a safe haven and inflation hedge, as well as Costco's ability to offer prices and undercut traditional dealers. Okay. This is extemporaneous. There's so much going on in this article and in what Bloomberg wrote and what we wrote up. Not only are they telling people that gold is something that should be bought now, that's a good thing. But they're also telling you that Costco's where to buy it. And there's merit in that. I mean, not in telling you to buy it at Costco, but they have the traffic. Costco is a shopping mall. And you're already there. You're going to buy your, gold there. You're going to buy your iPhone case there. They're treating gold like it's just another product. Now, they're not appealing to your normal coin buyer. They're appealing to your neo-Keynesian, suburban, upper middle class person who wants a Coach purse, right? Who wants a new golf club. And these are like trinkets for them. Now, do these sound like people that you really want to rely on to make to underpin the market? Well, the obvious answer is no, but the other answer is yes, because it'll keep happening. Just don't expect it to help you through the election. All right, so here's gold for the last year. Here, Josh Young. I bought one. Now I don't know who Josh Young is, but apparently Bloomberg thinks he's important. This is another thing. They go out of their way to point out that gold coin sales plunge as retail buyers balk at record prices. We're witnessing gold becoming a mainstream item, and that's good for the price, but it's going to revolutionize the business as the price goes up. I grew up in an inner city environment with a corner hardware store. They're gone. Corner hardware stores are gone, right? Except for New York City, bodegas and small grocery stores, gone. Replaced by supermarkets. Hardware stores replaced by Home Depot. We're big boxing gold now. Okay, so independent coin dealers, a fragmented mom and pop industry, are going to increasingly compete against higher cost, lower foot traffic, and a market that will sell gold probably at a price, depending on the form, at a price that's going to be hard to compete with. It's going to happen, right? And coin dealers, and this, I'm throwing this out there to every coin dealer out there. I have no allegiance and no friendship with any of them, and neither do I hate them. You're running a business. It's like, it's a business. Coin dealers have to become infomediaries. You have to become someone who makes people want to see you, who's not just coming to you to buy coins, even if it's at the lowest price. You have to do what Kitco did years ago. I don't know if they're doing it now. You have to give people news. You have to give them a reason to be there other than that. Now, unless you're opening a kiosk in a crowded shopping mall or you're stocking up Costco. That's going to be increasingly difficult to do. And what's going to happen is you're going to probably see the industry consolidate as low-cost producers begin to uh, cannibalize the mom and pops. It's it's unfortunately it's the American way. Um, I think there's plenty out there that can do well if they position themselves right, and it's not just by spending money, and actually it is by spending money, but not spending money on new coin designs. It's by spending money on um, something. I'm not going to discuss what it is right now, but something. Next picture. Costco. I mean, this is an infomercial for Costco, right? Right? And there's the truck. There's the story. Okay, I sent that out. That's free. You guys can see it whenever you want. But just look at it that way. Equity recap. 2008 is calling. U.S. equities ended lower on Monday amid rising oil prices and treasury yields. September 2007, we lowered we lowered interest rates 50 basis points. In 2008, the market started to crash amid higher oil prices and higher treasury yields. Keep that in mind. Tuesday, October 8th, NFIB Optimism Index. Small businessman index, it's an important part of the economy, but I don't think the market's going to be looking at that right now. I think they're more interested in the inflation again. Now that we've gotten the rate cuts, it's all about if there's no inflation, we'll be okay. If there is inflation, we won't get any more rate cuts. Quick look at the markets again. Okay, let me go back to what happened last night. So China, we'll go back to the hourly so you guys can see that. China, apologies. The news out of China was bad for their stocks. So if their stocks are going to drop, then other things that Chinese speculators would buy drop as well. So sell stocks, sell silver, which got annihilated last night, right? Sell silver, sell copper, and sell gold. And all those things drop, silver more than gold. But it's what happens afterwards that tells you what's going on, right? Copper stayed down, silver climbing back, gold now positive. All right. So China is in a bit of a problem here. Now, if you're looking for how it resolves itself in China, it resolves itself with probably the biggest, most massive stimulus you will ever see in your lifetime if this continues. It will be them printing money and throwing. It'll be helicopter money. Instead of helicopter Ben, it'll be helicopter Xi. He will be throwing money to people so that they spend money. They will panic to get people to buy stocks. And the people will take the money and they will buy gold because stocks don't go up for them. I'm Vince. Have a great day.